So having a pre-market open New York scan here and looking at gold, um, referring back to the start of the week's analysis at FX Street. I tried to put this up for the TradingView community, but froze the video after a 20-minute long analysis, and so I had to delete it. But it's up on my YouTube channel. Um, Nevertheless, gold, the chart of the week, how much can the bulls milk in the short squeeze? So I've come to the screen and it hasn't quite fulfilled what I was anticipating. Um, I'm looking for a move up before coming down in the expectation that the data this week in US CPI and retail sales would be bullish for the dollar, bearish for gold. Um, Now, we talked about a liquidity zone being above what seemed to be shaping up to be a ascending triangle. We talked about how there's more room on the weekly chart to move up, not necessarily to close up this week, but certainly to move up um, into the doji's wick from last week for a move lower. And we looked at the daily charts, noting that while it had the trajectory of the price had done what we forecasted the prior week, didn't quite make it up to a 38.2, um, and depicting really the consolidative mood in the markets due to conflicting forward guidance from the Fed compared to uh, inflationary data such as the jobs data and services data of last week, and markets on standby, nervous ahead of this week's retail sales and CPI to really flip the script as far as the Fed's narrative and the expectations of the Fed pivot later this year might not be what the doctor ordered after all. So anyway, so that's kind of depicting um, this price action here is depicting that. Um, so given that I hadn't reached a 38.2, there are prospects for the market to continue higher, even though this is looking pretty bearish. We're at support. Um, so until we really penetrate below support in the 50s, low 50s, the bottom of the current range that we're embarking on at the moment, then there is still potential for a move up before coming down. Um, and I'm sort of sticking with that. We talked about being in this 1,000 pip box, which was drawn way back when we were up in the near the 50s, 1950s, and we've made really good progress in that respect, and anticipation of a continuation lower. But for the meantime, I was just looking for that pop up um, um, into the CPI data for a nice setup to short. Now, what's turned out is we've come up initially up to that liquidity zone, which is what we had expected, but it hasn't really continued. Well, hasn't continued up. The London came in and sold that pretty heavily, right into um, a new box. So the prior box would have been between 60 and 70, and $10 box. Um, and instead, we're sort of balancing in between the two boxes um, at 60 or below currently. I know we're at 60 down here. Now, what we've got is we've got this bearish impulse, the correction of that, 3 days of rise, three levels of rise, the bearish engulfment for a first red day opportunity on Friday that didn't give us what we were looking for either. In fact, it closed higher. So again, rather mixed price action and markets. Um, we can draw this symmetrical triangle within a downtrend, which would usually give us a bearish bias for a breakout lower. And we've got this sort of jagged head and shoulders are the wicks. So resistance 61.5, and then the equal lows down at the bottom of the box, or the upper third, the top of the lower third of the box, to target for liquidity below for a 1815 target. So we're sort of looking at that, the resistance. Now, for a bullish scenario, we've still got this liquidity zone up the top, and we've still got this low hanging fruit up into here above that. We've got these equal lows that the bulls will be looking at, and having been raided, looking for a move up, to come down to go up. And that would sort of play in with my bullish thesis for ahead of the inflation data. So on the 15-minute chart, we've got that W formation in here, which is the raid on these equal lows over here. So if we write that in, this is the bullish thesis. So we're not taken by surprise if we don't get the bearish breakout continuation, symmetrical triangle, whatnot. This is the bearish equal low thesis. This is the bullish equal low thesis. So I'll change the color on that to give us a okay. And then the structure which is being built, broken, is yet to evolve. So the structure that needs to break is this. And in doing so, it will come up into that liquidity area that we've been talking about, and then potentially come back in and move continuation up. So that's the sort of bullish thesis being drawn out. Now the ATR on gold for the day, $25-26, and we've done around about $13-14 on the day so far. So we've got the 61.8 as a potential upside target in terms of the ATR. And then we've got the minus 272 on the downside as a target in terms of the ATR. And that minus 272 is on the 4-hour bearish corrections. No, sorry, minus 272 is on that bearish impulse. And I can draw the correction on the correction range. Target is higher up. The 61 comes in the bottom of the box, minus 272, just below the current box. The ATR brings us down into around about here. So very messy chart, but that's not where I'll be actioning from. We can use a different chart to clean that up. I keep that there because I use that for my longer term analysis. I'm just drawing short term stuff over it. There is an example of a cleaner chart. So we're within last week's range, down low within it. So pretty mixed outlook really. We could quite easily come up to liquidity above this triangle, or we could quite easily come down to test below these equal lows. And last week's lows to pull in some breakout traders, potentially moving back up for the event later in the week, the events I should say. But I'm sticking with the bearish bias considering the bearish prospects. And that's the bearish box. We've got this volume being built above the bearish box. Or arguably we could be heading up in the bullish box with target up high. And we will let the price action leading into the New York Open determine the bias. Right, elsewhere we've got cable, 3 levels of rise, bearish close on Friday, so we're looking for a continuation of that on Monday, first red day opportunity. So now in the charts we've got these relatively equal lows to target below. We are consolidating in the middle of the 100 pip box, which I'm making red for indicate that we're bearish on this pair. We had a sort of semi-break of structure in London in terms of the closes of these 1 hour candles. So we sort of came up high, smashed down low, so we broke that structure over here. On 2040-ish. Now we're getting the pump up, which is what we want in order to short. The daily ATR is about 115, 116 pips. It takes us down into last week's lows for a target, and then continuation down to minus 272 of this corrective leg for continuation trade. So this is the potential pump before the dump. So it's cable, dollar CAD daily chart in the shoulders up here, below all of that volume, downside. The M formation here, which is typically a inversion pattern coming up into that neckline, I'd like to see a bit more of an extension lower for the day ahead before we call that an end to come up, to come down. But nevertheless, we've got that in place. This could be the highs of the day. Seems to be that way. Um, but we're low to come up. So we're just putting our resistance there. Thesis potential is to come up into that. Don't really have any bias on this other than we are coming in to work the lows, potentially for a pump up in the US session. The lows of last week, breaking the structure on the inside here. So thesis could be up to come down. Dollar yen, something I talked about in Asia. Bullish fundamentals need to technically bullish chart bias. So that has been fulfilled already. There it is. So we're talking about breaking higher. $132.80. We've seen 132.77 high so far. Yeah, so you can read that there. Put in yen, Ross, and it'll come up in the news section of that article talking about looking for 132.80 highs, which we've had 132.77 so far on the yen. So this is not a rally that I particularly want to be shorting. This is breaking out of consolidation. This is on the front side, so this can easily move higher for the New York session. Up, up, and up. Having said that, we are heading into last week's highs, and so we could pierce above that potentially. But we've got this W formation on the daily chart, so we could be coming back in. So moving up to come down later in the week. But yeah, certainly looks like we're going to attack these last week's highs and liquidity above there. Dollar Swiss seems to be a continuation trade. These bullish closes into the end of last week. This correction into last week's lows down here of that impulse, so potential to move higher. We've seen a %50 mean reversion already, so that seems to be building to go up. In the euro, we're climbing up, but we're failing here at resistance. This M formation hasn't pulled up the bid, so on the 1 hour we are on the front side of the bearish trend still, and we're looking for the pump up into resistance to come down. So a few more to go through, but we'll leave it there. End of the video. Have a good day ahead, and there'll be updates as we go.